Exchange in Miami. Joining us now, we have Hamish Preston with S&P, Dow Jones Indices, and David Stack with DWS. Well, David and Hamish, it's great to have both of you with us.
Thanks very much.
Thanks.
So, Hamish, let's start with the 5-year anniversary of the S&P 500 ESG Index. What are some of the key characteristics of this index, and how has this informed its performance over the past 5 years?
Sure. So the S&P 500 ESG Index launched in January 2019, and it's designed to select S&P 500 companies that meet certain sustainability criteria while retaining some of the industry group weights of the S&P 500. So over the last 5 years, what we've seen is the S&P 500 ESG Index provided slightly better ESG metrics compared to the S&P 500, but it also retained the sector exposures of the S&P 500, as you might expect. Now, turning to performance, what we saw was fairly low tracking error compared to the S&P 500. And actually, over the 5-year period and over various horizons, the ESG Index posted slightly higher performance. Now, what you might think of in terms of the last 5 years is tilts towards information technology by the ESG Index helped and explained that outperformance, and it certainly contributed to it. But actually, what drove the ESG Index's relative performance was the choice of constituents.
Now, Dave, what are some of the key takeaways from the first 5 years of a passive approach to the S&P 500 ESG Index?
Sure. I think some key takeaways are when we start to look at the performance and what actually happened in the market. I think there's probably some misconceptions around performance. I think a lot of times when we start to think about ESG, that fossil fuel companies, or energy companies are completely thrown out of the index when that's not the case, right? So there's 75% of the industry market cap. We've gone through these different periods, where there was business contraction, there was a COVID sell-off, there was lower oil prices, higher oil prices, and then obviously a rising rate environment, and the index has performed extremely well. So it begs the question for your viewers and investors, does it strike the right balance between inclusions and exclusions? And looking at performance, I would say yes.
And turning back to you, Hamish, what does the S&P 500 ESG Index look like today, and how is that benefiting market participants?
So I think anytime we talk about ecosystem, what we're really talking about is choice. And over the last 5 years, the ESG Index has come to serve as the basis for a variety of investment products. And clearly, I think that's benefited market participants looking to benchmark or express views on large cap US equities while incorporating sustainability criteria. Now, I think particularly interesting with the S&P 500 ESG Index ecosystem is the liquidity around the index associated with the variety of financial products. And in fact, research that my colleagues at S&P Dow Jones Indices recently published pointed to the fact that although the trading volumes of the S&P 500 ESG Index and the products associated with that index are dwarfed by the S&P 500, compared to other sustainability indices and products, the S&P 500 ESG Index ecosystem certainly stands head and shoulders above that, bolstering its position as the most liquid sustainability offering for US equities.
And finally, Dave, has the way that market participants are using the S&P 500 ESG Index changed during its first 5 years?
Yeah, sure, absolutely. It's a great question. I think when we start to look at the initial investors into these types of strategies, essentially they were ESG buyers. And then I think that's obviously grown if you just kind of look at the overall holders of these types of strategies. I think originally ESG, I think that's actually grown to where people are just looking at what the performance is and how the index is constructed.
Well, Dave and Hamish, thank you both very much for joining us today.
Thank you
very much.
And thank you to everyone watching. Once again, we're here at Exchange in Miami, and I was joined by Hamish Preston with S&P, Dow Jones Indices, and David Stack with DWS. I'm Jenna Dagenhart with Asset TV.